What's up, y'all? Tommy here. So today what I'm going to be doing is I'm going to be reviewing the TOMO credit card, which is a no credit check credit card that has given credit lines as large as 10K. Okay, so that's something that interests you. Be sure you stay tuned. All right, y'all. So right off the bat, what is the TOMO credit card? So basically, it's a new card started by a fintech company, right? A lot of these fintech companies, what they're starting to do is they're starting to look for different types of methods to underwrite these cards, right? They're not really going through the normal means where they pull your credit report or pull your credit score and then they use that to base whether they should approve you or not. They're actually, this company's using different methods, which I think the actual main method that they're using is that they're actually going about, more than likely linking to your bank account and seeing based off of your bank activity, how much that they should lend out to you. Okay. Now I do want y'all to keep in mind, this is more of a charge card than anything, right? And the reason why I bring that up is because with charge cards, you technically have to pay these back by the end of the month. Okay. And that's really a key point that you want to make sure that you understand, is that you only want to put expenses on this card that you can pay down by the end of the month. Okay. So just keep that in mind. Now, the benefits of this card is they do no credit checks. So, again, they're just going to use your banking history, and based off of that, they're going to decide how much credit to extend to you, right? They have no annual fees. So you're not paying any type of reoccurring fees off of these guys. They have no APR. Okay. Now this is, it is huge to have no APR, but because they're operating as a charge card, it makes sense because, you're not going to be carrying over a balance at all. Right. And what I found is it looks like they're making most of their money, in case you're wondering how they make money. And that's kind of what I always try to teach you guys, is always try to figure out how the company's making money, right? I think there's nothing wrong with the company charging you for their services. There's nothing wrong with a company making money off of you, as long as you have, you benefit from it, right? Everyone knows that, Facebook is one of the biggest companies in the world, right? And most people don't, even though they know Facebook makes a lot of money, they might not mind that Facebook is making money by showing advertisements to them while they're, scrolling through and keeping in contact with their friends and things like that, right? Some people might. So whenever you understand how a company's making money, right, and whether that's benefiting you or whether that aligns with what your goals are or what your objectives are, then that's whenever you can make a better decision, right? A more informed decision. So these guys, when it comes to how they make money from interchange fees, right? So credit card interchange fees. Basically what that means is whenever you are going and, you swipe your card at, at a store or something, or you're typing in your credit card information online, the retailer that actually takes your credit card or charges your credit card, they pay a fee, right? And they pay a fee to the credit card, the actual credit card themselves, whether it's like Visa, MasterCard, whoever it is. And part of that money is, or that thing is called the interchange fee, but part of that money is going to go back to this bank, right? So this bank's going to get a cut of it. Now, I now dive deeper into this section later, but I'm going to kind of explain my thought process on whether that's a good thing or not. Okay, so I'll touch on that here in a little bit. But on top of that, they also do report to the credit bureaus. They're going to report both your credit limit and your pay history, which is also another great benefit. Now, these guys, one thing that's really interesting is I actually saw that it looks like the owner or the CEO of this company actually did a Ask Me Anything on Reddit. If you guys haven't heard of that before, there's a group on Reddit where, if you're pretty much anybody, right? If you do something interesting, you can, basically put a post on this specific Reddit group where once you put that post, you just say, hey, I'm an astronaut, ask me anything, right? And people just, they find that interesting. They're going to ask you questions about your job or whatever it is you're associated with, right? And so she did one saying, I just started a fintech company, ask me anything. And people were kind of asking her questions about the card. And that's kind of where I got a little bit of these other pieces of information as well. Now, my thoughts whenever I was kind of hearing her talk is that's kind of when I heard about the whole thing with the interchange fees. It's whenever you kind of look at it, they're not making that much money from the interchange fees. Okay. And I think that's kind of one thing that made me a little nervous was, at the end of the day, I think it's important that you know how a company makes money. And this company is making money from interchange fees, but it doesn't make sense. And what I mean by that is they need to have, it's a fintech company, right? So they need to have more money coming in, and it only makes sense to me that they're going to have to find other revenue streams. Okay. And that's probably the part of it that makes me a little nervous is what are those revenue streams going to be? Will it be a situation where they start charging annual fees? Are they charging, like, where is the money going to come from, right? Are they going to get that money specifically from the card owner, the owner of the card? So like, if I have a card, are they going to be charging me somehow either a monthly fee, or what is it, right? Like, where is the money going to come from? And that's probably the part that makes me the most nervous. Besides that, I mean, it seems like it's just kind of, your basic fintech credit card. I think a lot of these fintech companies are kind of all doing the same thing, right? They're kind of starting a credit card and positioning starting a credit card and just positioning it as, we don't check your credit, and we're going to find other means to decide whether it's worth it for us to give you a line or not, right? And of course, they're going to do it with your banking activity, which makes great sense, right? I think that whoever first started that trend, it made perfect sense. But I would much prefer having I think they're better than a secured card, because you don't have to, you don't put down an amount, right? And you're able to use that card and build credit at the same time. But I think they're not better than secured cards with a graduation track. And here's my thought process on that, and I'll explain that here more. Okay, now I've shot a video on the best secured cards, and I'll link to that video down below. But in that video, basically what I talked about was that the best secured credit cards are the ones that have something called a graduation track, where at after a certain period of time of you having that card and making on-time payments and everything like that, they graduate you to their lower tier, or the first tier unsecured card. So typically what happens is, let's say, for example, that you have an unsecured card and it's been 12 months or something, or 10 months. They're going to reevaluate your account. And then if they upgrade you, they're going to send you back your deposit, and they're going to upgrade you to a card with the unsecured line. And they might even give you a credit limit increase depending on the situation, right? And I think those are going to be the best cards, because you have a secured card that upgrades, and now it usually sticks on the same account, meaning your account, the name of your account on your credit reports is just changed to whatever that new card is called. So that account is still open the entire time. So you don't have to worry about getting it showing on your credit report like an account's been closed and a new one's been open, which can hurt your credit. But not only do they do that, which is a good thing, like they actually just keep that account congruent, like they keep that account going. But they're also gonna it's a more reputable company, right? You're going directly to the source. It's going to be going to a bank, and the bank's going to be, they have to follow certain regulations to make sure that they don't ever disappear or go insolvent or whatever the case is. Now, when it comes to these credit cards that you're getting, you got to keep in mind that yes, they are backed by banks, but you got to keep in mind and know whether the fintech company is going to be there for the long run or not. So if you are interested in secured cards, check out the video I shot down below. I think probably the best one in terms of the cards that were there was the In Rewards secured card from what's called the Navy Federal. It has a graduation track, and it's both an established business. So that's why I think it's really great about that one. But guys, again, I'm mentioning that, but for some people, it will make sense for you to get this card, the TOMO credit card, okay? I don't want to completely shoot it down and make it seem like it's not worth it. I still think that this card has a place, especially if it's someone who, if you're someone who just wants to get approved to be able to, and not have to worry about putting down any sort of amounts. So you don't want to have to actually put down a deposit or anything. Then the TOMO card is still going to make sense for you, right? Okay. Now it's going to be interesting to see what happens next, right? This company, again, like I said, I was kind of looking about how they actually make their money, and I kind of broke that down a little bit. I guess we'll find out in the next 6 months to a year whether their business is sustainable. I am seeing that, they've been doing, and this is per Crunchbase, they have raised money a couple times, right? Undisclosed amounts through different sources. And this is what I'm seeing on Crunchbase. Okay. And so I think with that, it'll be interesting to see how kind of everything plays out in the next couple months. I did actually reach out to them. Typically what I do is if I find a card that seems like it's beneficial or that people want me to do a review on, I will reach out to the companies to get additional information, see if maybe there's like we could somehow partner, things like that, right? So I try to, you know, just start the conversation. It was a little difficult getting a hold of those guys, so I'm guessing that either they're really busy, like a lot of people are signing up for it, or maybe they're in a situation where right now they're kind of trying to improve what they have going on as opposed to take on new clients. I'm not 100% sure, right? So, but so I didn't get a chance to dive deeper into the card with somebody from their team, but just kind of, this is kind of from what I'm seeing online and seeing from the actual CEO's mouth, certain things that she mentioned, right? And so that's going to be pretty much the gist of it. Now, again, it's going to be great for some people who don't want to put down a deposit and is looking to build credit at the same time, as they're going to be reporting to the credit bureaus. But, you know, that's going to be really the gist of it. That's how I kind of see it. You kind of have to decide which path you want to take. Do you want to go the secured card route that upgrades or that graduates to an unsecured card at a big bank, or would you prefer to not have to worry about putting a deposit and you go with a fintech company, right? And for some people, you might even go both routes. Just, you know, that might be an option for you as well. So it's just kind of, I want to kind of give you guys all the potential opportunities or options that you have available. Okay. And guys, that's going to be pretty much it for this video, guys. I hope that at least kind of gave you guys an idea. If you're thinking about actually jumping into this card, it kind of gave you an idea what route I think you should go personally. But if you do have any other questions, be sure that you throw it in the comments down below. I'll be sure to go over them. And if you have any other topics that you want me to touch on, be sure to comment down below as well. And lastly, I will also be linking to a bunch of other videos if you're looking to improve your credit. Videos like how to you know, deal with charge-offs, how to deal with late payments, hard inquiries, you know, debt collectors, and all these different kind of issues that you might have. I more than likely have shot a video on any issues you have on your credit. I'll link to that down below so you can check it out. Some of these lessons even come with free letters for you as well, so you can take advantage of that too, okay? So that's gonna be pretty much it, guys. Make sure you throw a like on this video. Make sure you hit the subscribe button down below as well, and I will see you at the next one. Peace.